Good morning and welcome. Patriot Radio News Hour. Joe and Jason on a Friday. Sit back, relax, strap on the seatbelt, leave the drive-in to us on this Friday. Another week in the books, and it's a tough one today. We've got the Fed's favorite inflation numbers. Well, hot and hotter and going to get hotter. As, the probably shouldn't be unexpected news, right? The Dow is down significantly right now, just under 600 points. We have a new all-time record high in gold. Silver's at a 13-year high. We keep telling you what's going to happen. Buy now, because next year it's going to be even next year, heck, next week, next month. It's looking more and more, just looking more and more like, are we going to see 4,000 gold this year? I would have told you, listen, in January I'd have told you, no way. I mean, things would have to really go bad for that to happen, right? Now I'm telling you, it doesn't even have to be horribly bad for it to happen, because demand is through the roof. Silver, we talked a lot about silver yesterday. Do we potentially have a Hunt Brothers situation going on in the silver market? Let me just get it here. The guy's name is David Bateman. Took physical delivery of 12.69 million ounces of silver. To give you an idea, that's 395 metric tons from the COMEX. And it is absolutely insane. He took a picture of all the pallets of silver to give you an idea. It would take up pretty much my front office, the whole office. I got a flex space, so I got about 1,500 square feet of office. Yeah, and it filled the whole thing, and it filled up my whole back warehouse.
We need to put that picture on the website and then put under it, take delivery of your silver.
Yeah, it is. This is a game changer now, because this is something where, again, the amount of product being physically delivered, it really is. It's unsatiable. They're just pounding out. Talking about one guy taking 395 metric tons of silver. And guess what? He said, I want another 395, right? I want to keep going here. I normally wait, but we can't wait. I've got a huge special. It's going to be pretty limited, but we've got it. So we've been running 20s all week. It's a crazy. Gold, by the way, been as high as $3,090. $20 gold pieces, 1 through 9, $30.95. 10 or more, $30.85. 20 or more, $30.75. By the way, right now, spot gold, $30.75. So, worst case scenario, you're buying at $20 over. Spot. Maybe $10 over. You buy 20 or more, $20. Spot. Silver. Okay, now this one, I've got 100 rolls of Mercury dimes. Now, everybody, this is one of the games all the competitors like, they're like, we'll take out all the Mercury dimes, and they charge you more. A roll of regular dimes, which, we don't sort through, $140. I got 100 rolls of Mercury dimes, $135. I've got 100 rolls of Walker half dollars. Now, the Walker, so remember on the half, you got the Walkers, then you got the Franklins, and then you got that one year, the 1964, the Kennedys, before they went to 40%. So the Walkers are the oldest. And Jason knows this. They get beat up. So they're definitely more worn than the Franklins or the Kennedys, but you don't see them, and you almost never get to buy rolls of Walker only half dollars. What I'm being told is you can read all the dates, which on the Walkers is you're talking about 1950, 1960, 1920s, the Great Depression era. These were the half dollars that were in circulation. And Jason, right now, we ran half dollars yesterday. Regular half dollar rolls are $2.85, $2.70 on these 100 rolls of Walker. So Mercury dimes, I only got 100 rolls. All dimes, silver dimes. These are the Mercury dimes at $135. I've got 100 rolls of those. I've got 100 rolls of all Walker half dollars at $2.70. And then this is it, your last shot at buying gold below $3,100 today. $20 gold pieces, $30.95, 10 or more, $30.85, 20 or more, right at spot, $30.75. 592, is the phone broke? Are you guys not listening? By the way, if you want to buy all the Mercury dimes, all 100 rolls, $13,500. You want to buy all the Walkers on the whole bag, $27,000. You want to buy gold below spot now on $20 gold pieces, call us. Call us. By the way, let's take a quick look at the markets. The Dow's down 570 right now. The S&P's down just below 100 points. The Nasdaq's down almost 400 points. The 10-year note falling here today, 4.285, as companies like Lululemon and others warning about once again, where's the consumer? And, of course, Lulu, one of the bright spots in the consumer, saying, something happened. Crude oil is down today, but still floating right around that $70 range. Gold's up 19.30.78. Silver, I really loved what silver did today. Tested 34, bounced here. Silver right now 34.15, but silver's been as high as 34.75, and of course that May silver staying above $35. It's absolutely imperative to add to your holdings while you can at these price points. Right now, to give you an idea, on Monday, 32.25 for $20 gold pieces. And that's assuming gold doesn't go higher. Jason and I were talking, gold during this whole rally has had this pattern where when you get big up days on Fridays, usually come Monday, Jason, gold shatters another record, right? There's obviously we don't know, but Jason was researching this, and he was telling me, Joe, do you know that? Look at where gold's at, what it's doing here. good possibility we're going to be over $3,100.
Let's go.
Come Monday.
Let's go to last year, right around March. Gold got back to 2,000, right, which it had touched a few times. I wonder if we're going to have a yearly, if we're hitting like a yearly situation. Let's see what happens on Monday. Gold got to 2,000, and then on a Friday, Monday, up on Monday, it burst into 2,100. The next Friday, it went up again on Monday, then went to 2,200, and did this for several weeks in a row. So here we are on the cusp of 3,100. If it goes up Monday, it's probably going to be racing to 3,200, and we'll see what happens next Friday, next Monday. Everybody last year that was saying, I wish I would have bought in January, I wish I would have bought February, as it went from 2,000 to 2,500 and 2,600, it might be doing the same thing. In the stock market, they have a thing, a lot of really rich dudes, they like to take the whole summer off, right? And their whole family takes the whole summer off, sell in May, walk away. If you look at Bitcoin, it started selling off in March. It's lower, right? It happened sort of the same way last year. Bitcoin, the stock market, they start buying it again in September, October. Gold went up the entire year, and it went up dramatically in March and April last year. So are we looking at the same thing? If gold goes up, it hits 3,100 on Monday, I'm going to be eyeballing Friday, because if it goes up again on Friday, then you're looking at 3,200, and it goes up the following Monday, we're looking at racing to 3,300. Yeah, I don't think it doesn't have to go that fast, but that's what it did last year. We're in the same time frame, Joe. So people, and like Joe said, it's going to do well this year no matter what. I think there's a huge disaster, man-made financial system disaster getting ready to happen. Iran war, I think, Joe, is what we're looking at sometime this year or next year, and then gold will just explode.
Yeah, right now, 3,150 is kind of like, because, obviously when you're at all-time highs, you got to look at what are the computers going to do. That kind of looks like the next point. And again, we could see $3,300 gold very, very quickly. When I'm looking out, okay, well, where could possibly be a resting spot? Maybe 3,400. I know some long-term technical charts with inflation and all this stuff is a big possibility. And like I said, my hope now for silver is it's not 50. That's my hope. When you've got players now, and listen, this guy Bateman, he wanted people to know. How many others like him that don't want to tell? Hey, I don't need the spotlight. I'm glad this guy's taking it, but I don't need that type of a spotlight here on my things right now. Okay, so here you go. Right now, gold's up $23, 3,081. So now we're approaching. Right, and who knows? By the end of the day, all of you may be buying $20 gold under spot. 1 through 9, 30.95. 10 or more, 30.85. 20 or more, 30.75.
Ridiculously
silver,
Ridiculously low.
Yeah, silver is charging now.
So Joe, today is Friday the 28th. Yeah. Gold hit $3,000 on the 14th, 2 Fridays ago, and now we're talking 3,100. It's sure starting to echo last year. It sure looks like it. And all those people, I can't tell you how many people in the back half of 2024 is like, I just wish I would have got it in February and March. Listen to what you said to me and what you were thinking last year. If it's going to do another $1,000, Joe, if we're going to get to 3,700 like gold ended up last year, 2,800, 2,700, or are we looking at 3,800? And then bursting into 4,000 early next year. I mean, I don't think it's going to stop. People really need the geopolitics of what's getting ready to go on in the world. I mean, we'll talk about this maybe a little bit on the next hour, but there's some bleak headwinds coming. There's a dark cloud coming, Joe.
Well, let's look at it. What is the catalyst today? The Fed's favorite inflation indicator. It's called the core PCE. And it printed hotter than expected, up 0.4 month over month. And here's the thing. We still have a couple of months falling off that were really low last year. And yet still, year over year was up to 2.8%. And here's the problem. We got one more crappy month coming off, and then it gets worse. Basically, get ready. The Fed is going to have to acknowledge that the inflation is back well above 3%. Just to give you an idea, the 0.4 this month, if you did that every month, that's 4.8%. Inflation, right? Way hotter than, and these are the numbers before the tariffs. So this is a February number, so something to keep in mind. Again, it was much hotter than they were anticipating. We may be looking at the last remnants of the old economy before inflation expectations permanently reset upward. This might be the opposite of Goldilocks. Listen, this was the only way things could go. They got lucky, had some low numbers last year for a variety of reasons. All of these low numbers are starting to come off. They only go up. March is a low number. Then April, it's low, but not as low. And then come May, June, July, all those numbers go way up. Jason, we may start seeing, it is possible that we may, this summer, start seeing core PCE at 4%, double what they want. And yet, again, they're not talking about any types of rate hikes. They're not going to save it. They dust it off transitory again. This is a storm that we saw coming. I thought it was very obvious, but again, Wall Street doesn't want to believe it. But you know what's funny? They don't tell you this on the TV. But all of those companies, they got these guys they bring out there day after day after day. You know what they don't tell you? Oh, yeah, well, my CEO, he was on the phone with the gold and silver miners trying to lock up stuff for us. Right? We talked about that yesterday. All these guys, right? Wait, how can I get hands on my gold, more gold and more silver? Jason, it really is. This is the perfect storm. There was no good outcome. There was no good choice. And essentially now I think the markets, Wall Street has been slow to come to the realities. But, Jason, I think the bigger thing is they're buying up everything. They're buying up all the gold and silver while everybody's still, I get it, right? Well, I don't know what to do, so I'm going to do nothing. I'm going to wait and see. And by that time, Jason, I think it's going to be really hard. I think we're going to go into a situation where all of a sudden product will be hard to get by the time the retail investor gets involved.
Yeah, gold is a leading indicator of inflation. People think it's the other way around, that gold is reacting to the prices going up, but the prices, so-called, are going up slower in the last year. The Fed's kind of happy that they're getting close to their goal. We may have a couple of numbers coming up in a few months. Maybe that inflation goes down. We'll see. It could just go straight up. But I think there's going to be like a dead cat bounce, Joe. Or there's going to be inflation that gets to a kind of a happy level maybe in the next weeks or months. And then it's going to go. And the gold prices that went up in 2024 and now in 2025, and who's going to see how severe? It's scary for gold to go in the 2,000 range late 2023, and it's looking like it could be eyeballing $4,000 at the end of this year. What does that look like? The inflation is coming. These paper gold prices don't move unless someone's buying paper gold, right, Joe? Somebody has to be buying the paper side. It's not just physical. The physical is moving it. So big, wealthy individuals are throwing more and more money, and they're putting it in gradually. Look, it's not like it went from 2,000 to 3,000 in 3 months. It went from 2,000 to 2,500 a few months, and then it trailed up to 26, 27, 28. Now here we are talking about 3,100. That means lots of large money is going in. The large money goes in because they know before the inflation comes roaring in. It's only a leading indicator because those that are in the know and have leading indicator numbers, right, Joe? Joe has all the numbers. That's why you guys listen to the show. But all he could give you is the lagging numbers. They don't give us what's happening on
right.
March 28th.
I'm giving you a February inflation number, and it's the end of March.
Yep.
Right?
Yep.
I'm giving you a February number, and it's the end of March. And the big tariffs don't even go into effect until the beginning of April.
And
these numbers are going to get a lot
biggest,
hotter.
richest guys in America are all having a powwow over there, in the Trump inauguration. They're not getting together so that they lose money. Well, I get the feeling that a percentage of their portfolio is going into this very quietly, Joe. Warren Buffett.
They're not bragging.
Warren Buffett is not he does not like gold. Why do I get the feeling he's putting something in gold right now? Why do I get the feeling that the gold-hating Buffett is saying, well, I
don't know about Buffett. I don't know about Buffett doing it, but
would you rather,
I can guarantee you a lot of these billionaires are.
Would you rather sit on $300 billion in cash, or would you rather be sitting on $300 billion in gold right now? He's not a dummy. He may hate gold, but you know what? I bet he quietly has a little stash at this point. That's my guess. I'm guessing he has a stash right now.
Mercury dimes, 135. Walker half dollars, 27. 951-0592. Big down day on Wall Street as the core PCE, which is the Fed's favorite inflation number, smoking hot, up 0.4 month over month. Year over year, 2.8. Unfortunately, this was a February number. So we had some tariffs kick in March. We have more tariffs kicking in April. We're going to see, again, this inflation that they promised would be 2%. Now the latest, so one of the Fed governors came out and said, well, maybe 2027. Right. Maybe it'll go back to, give it a few more years. It'll be okay. The CBO, the Congressional Budget Office, they just came out with their latest report. And again, it's such a worthless thing because they only can project what the government tells them to. But even with this, much higher deficits, and they're saying that what they are getting from the Trump administration, that the tariffs will only attract $800 billion over the next 10 years. That is much lower than what anybody was hoping for. This is going to put enormous pressure here. If we're only going to get $80 billion a year out of these tariffs, we're going to have a problem. It's got to be more. They were hoping to get close to $200 billion a year from these tariffs. So, Jason, the CBO says, hey, we've done the math, and it's not there. We don't have anywhere close to that number. It's kind of like Doge. Hey, we want $1 trillion. Right now, it looks like $200 billion, right? And then tariffs, we want $200 billion. Well, it's going to be 80. Those are huge shortfalls. And I think, too, when we think about, remember what Moody's said? What was that, yesterday? About the debt? And how, hey, we warned you in October of 2023, and it's only gotten worse. And now the United States, according to Moody's, is in the worst shape of all the quote-unquote higher-rated countries in the world as far as they go. And, we're sitting here, gold's up $24, 3,083. last day, gosh, it seemed like it was, a month ago? I was telling you, hey, is this the last chance to buy gold below 3,000? Is this the last chance to buy gold below 3,100? And honestly, it might be the last chance to buy it below 3,200. We get another update. We get gold over 3,100 come Monday. You're not buying it for 31. You're not buying it for 31. $20 gold. Wake up here. 30.95, 3,095. 10 or more, 3,085. So 10 or more, you're like at spot. 20 or more, you're below spot at 3,075. And these Walker rolls, Walker $half rolls at 270. You just don't see that. I mean, the worst of the worst of the worst Walkers, you may be able to buy them for $270. But where you can actually read the dates and all of these on their wall, they want 300, 320. Someplace want $400. No, 270. And then the Mercury dimes, they're $135. All Mercury dimes. And Jason, as you know, you just don't see these very often, and you never see them at these prices.
Pre-33 gold, that's essentially $100 over melt. So if this is pre-33 gold, this is not just a 1 ounce gold eagle, which is a bullion coin, which they mint out for gold consumption. This is pre-33 gold. With these, if they're $20 libs, they're 1907 and older gold coins that are 130 years old, 120 years old, for $100 over melt. These premiums won't be here much longer. Anyone listening to me on the air, I talk about this big emergency coming, the next one, the next 9/11, the next COVID coming. The premiums will evaporate, and you'll suddenly look at, let's just talk $3,500 gold selling for $4,500 an ounce, Joe. It's actually very likely that if we have gold at $3,500 and the premiums go up, Joe and I are talking about $4,200 gold on the air, right, Joe?
Yeah, and I'm looking at the May silver contract. It's getting ready to go positive. Right now, it's only down 3 cents here, 35.05, but this is something where gold and silver are sending a message, and the problem is going to be what happens when Wall Street falls below 40,000, right? When the S&P does it break 5,000? How far does it go? Do we go back? I don't know, to 32,000. I don't know. It's hard to see how the Fed can cut rates with inflation doing what it's doing. And, this February number caught everybody off guard. This wasn't supposed to be, I think people would have accepted this number in April, right? We would have accepted that number in April, in May. But this came early, and it's something where now I think everybody's kind of worried about, okay, if the Fed, is the Fed going to cut? Here's the thing. I think the Fed will cut rates, inflation be damned. And that's why we're going to see gold at 4,000. That's why we're going to see $50 silver. Because I don't think they're going to have a choice, Jason. It's just that simple. I think they're going to have to essentially cut rates while inflation is roaring.
I'll just keep going back to it. 6 hour, sometimes 10-hour waits in line in China to buy just jewelry in China. Jewelry, the most expensive gold you can get, priced over an ounce. Listen, when inflation happens worldwide, America, because it's the world reserve currency still, it's still heavily traded and used. We feel the dire circumstances later than these other countries. And so other countries are starting to feel the heat, Joe. I mean, this is why worldwide tensions are getting worse, aren't they, Joe? Things are getting very, very worrisome across these Middle Eastern countries and Europe.
800-951-0592. Is the Fed going to have to bail out hedge funds? Uh-oh. Talk about that next. 800-951-0592. This is getting a little weird here. Bloomberg is reporting that a panel of financial experts. Now, I don't know who this panel was, but I got a pretty good idea because they want the Federal Reserve to set up an emergency program that would close out highly leveraged hedge funds in the U.S. Treasury markets. So, obviously, J.P. Morgan's involved, right? Bank of America's involved. All the quote, dealers in the U.S. Treasury market are saying, so what is this highly leveraged? These are hedge funds that make these very leveraged bets on the direction of treasuries. And if they unwind, in other words, I can't make the margin calls, all of a sudden you have an avalanche of treasuries that need to be snapped up somewhere. And now it's gotten to the point where they're now telling the Federal Reserve, this is going to happen. This is very reminiscent of Mark Cuban from Bank of America. Remember, he warned about the last, they called it the tantrum, the bond market tantrum, right before COVID, and saying, "Hey guys, you're riding right into this storm." Now remember, the Fed now only selling $5 billion a month now. That's their new quantitative tightening, kind of ridiculous. But they're saying that roughly $1 trillion in hedge fund arbitrage bets would not only hamper the Treasury market, but could lead to the downfall of others, requiring the Fed intervention to ensure financial stability. So what are they saying? Well, the Fed's going to have to come up with a major bond buying program, right? They're talking about $1.6 trillion in just weeks, saying that this would be even more than what was happening during COVID. And it's interesting as this is coming out, but they're saying that the Millennium, Citadel, Lighthouse, and others are really over leveraged. And the fact that you can sit there and say these guys are over leveraged, why hasn't the Fed done something to prevent this? And the answer is simple. Jason, they need people to buy treasuries. It's a problem. There's not enough people out there to buy. And wait what happens when they raise the debt ceiling, right? We're still in emergency measures. By the time they raise the debt, Jason, the debt may be 38 to 40 trillion by then. We just don't know.
Well, and the more you spend and the more you borrow. And Joe, remember, I've been saying this for, since the inflation was starting after COVID. I was like, look, there's one place that you can spend those dollars. If China doesn't want them, there's one place you can go spend them. You can spend them right here. And, Joe, that's going to be more and more and more expensive. It's going to drive prices up. The borrowing would have to increase. This is how hyperinflation can get started, right, Joe? This is how stagflation can get to be stagflation with a heavy on the inflation, right? Right, Joe? And yeah, that's hedge funds going down, and you just wonder, okay, the first question that always comes to mind, well, I wonder who's in those hedge funds. Who's heavily leveraged in those? And then I just go right back to it. I go right back to the inauguration. I see all those billionaires standing up there. Suddenly, they're all good friends, and they're all shaking hands. And I used to hate Trump, but I love him now. And it sure makes me wonder, Joe. It sure makes me wonder is we get the lagging information. They get the early information. Why are they joining? Why are they joining hands and trying and huddling up like they need to set up the offensive line to push past the defense, get a touchdown, right? These are individuals, but they all seem to be playing, and they all seem to be rowing the boat in the same direction, Joe. What you just mentioned about the hedge funds going under, these are the things that, like you said, right before COVID. I remember we were on the air. You were talking about the repo market. You were still doing the show by yourself, but I remember doing the shows, and I remember saying, the 10%. It went up. The interest rate went up to 10% on the overnight loan on some unnamed bank that we're not allowed to know, or if it's multiple banks. Remember, we don't know who got pushed into that 10%. That's what was the overnight lending rate back then? 3, right, Joe? 2, and somebody was forced to do an overnight of 10.
Yep.
And then, magically, here comes the emergency.
Listen, the repo markets are right. There's no money there. I mean, there's some, but it's tiny now. Remember, they were up to $2.5 trillion. Now they're like, I don't know, a couple $100 billion.
And that's the reverse repo. It's nothing. That's the reverse repo. What happened in 2019 was the repo market, the overnight lending.
Well, this is what happened, right? And this is what I'm saying. The reverse repo can't save it.
Yes, there's nothing to save it.
And then the overnight, just to give you an idea, 20 to 56 times leverage these hedge funds are in the Treasury markets. It's a recipe for disaster. Patriot Radio News Hour, final segment of the week. Stay with us. Oh, man. What is next week? 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up this Friday. If you're just joining us, it's a new all-time record high for gold today as inflation came in red hot. Right now, the gold markets are up $26, $3,085. Are we going to see 3,100 today? Right now, gold right near the top here. It's been as high as 3,088. $20 gold pieces, 1 through 9, 3,095. 10 or more at spot now, 3,085. 20 or more below spot at 3,075. And then the Walker $half rolls. So you're going to get all Walkers in these. They're $270 a roll. And I've got 100 rolls of those. We had 100 rolls of Mercury dimes. All silver, pre-1965. These are the older ones, right? The Walkers and the Mercury dimes, They went together, right? So these are the older, early 1900s through the Great Depression up until the early 40s. They're $135 at 800-951-0592. Right now, the Dow is down 550. The S&P is down 87. The NASDAQ's down 386. As worries not only about inflation and while people aren't looking. This is the thing. This is why we're about. We're all focused on tariffs and war and Trump and executive orders. A warning issued by the people in the know that we've got a problem brewing in the U.S. Treasury market with these over-leveraged hedge funds, and the Federal Reserve better be prepared to step in. And, Jason, that would be a storm, right? No, it's funny how yesterday Bank of America gave up, jacked up their gold price forecast, and then Goldman Sachs started talking about, hey, there could be a tailwind of $4,500 by the end of the year. This is how you would get there. Roaring inflation, the Fed not only being forced to cut interest rates, but then being forced to essentially bail out hedge funds in the Treasury markets. Jason, that's just an ugly scenario any way you slice it. And that's when you could see, right? You could see the Dow losing 5,000 to 10,000 points with that kind of stuff going on.
Yeah, and watch those markets start to fall apart, and then the rates start to go down, and then the spend, baby, spend. And once again, there you go. There's your outrageous numbers. You know, the GDP, the GDP to the number 125% debt to GDP. We're at World War II levels. This is going to be the number one thing that the current administration and the Fed are going to be attacking. They need to bring that down, and that's all about inflation. It's going to be inflation, Joe. Everything that's being done is about inflation. And gold is telling it to you before it happens even more.
Every day, 800-951-0592. Continue to add here as, we'll see what next week's going to bring. Jason and I were coming right back.